Hello guys, welcome to another amazing and exciting video brought to you by Learnity. And in today's video, we're going to be talking about leverage and margin in the foreign exchange market. So practically, we are going to try to understand what leverage is and what margin is when trading the foreign exchange market. And we will learn the pros and cons of this and how to use them responsibly. So I want you to pay maximum attention, keep away every form of distraction, and make sure you watch till the end of the video. So to start with, what is leverage? Now, in financial terms, leverage simply means a borrowed capital. It refers to the use of borrowed capital to increase your potential return on an investment. Now, in the foreign exchange market, leverage typically allows us to control a very large position in the currency market with relatively small amounts of capital. Now, this means that even if you deposit little capital, you can be able to control much equity in the foreign exchange market despite the fact that you deposited just little capital. So leverage is just like a multiplication tool that multiplies your purchasing power using just small capital. Now, there are different forms of leverage, and we'll go into that in a couple of minutes. But then let us first look at what a margin is. Now, margin, on the other hand, is the amount of money you deposit with your broker to open and maintain a leverage position. Now, typically, I want you to think as leverage as a security deposit or a collateral for opening a trade. And there are different types of margins, and we'll look into those in a minute. Margin is just like a portion of your capital that you keep aside to enable the broker to open a position and manage a position for you. So typically, we look at margin as a collateral for opening and managing a position in the foreign exchange market, or when you are taking a trade in the foreign exchange market. Now, let us look at the types of margin we have in the foreign exchange market. But before we dive into the types of margin we have, I want you to know that there is currently an ongoing 5-day free Forex training program at Learnity where you get to learn a lot about the financial market, a lot about the foreign exchange market, where you get to learn, especially if you're a newbie, you're just coming into the market and you want first-hand experience and you want to up your knowledge about the financial market and the Forex market in particularly. This is your chance to actually sign up and save your spot for the 5-day free Forex training program ongoing at Learnity. All you simply need to do is use the link in the description below, sign up, register, save your spot, and do not miss out because it is going to be fire. Now back to the video. We have different type of margins. We have the initial margin, maintenance margin, we have the free margin, and also the used margin. Now, the initial margin is typically the amount that is needed to open a position in the foreign exchange market. You want to look at this as a collateral for opening your position. All right, while the maintenance margin is the minimum you must have in your account to keep a trade open. Now, the difference between the maintenance margin and the initial margin is that the initial margin is required before you can open any trade or position in the foreign exchange market, while the maintenance margin is the minimum you must have in your account to keep your running trade, your open position. All right, that is the difference between the initial and the maintenance margin. Now, the free margin is the amount available for you to open a new position. Now, when you open a position, there is already a margin that is set aside to maintain that position that you actually opened. And then there is also a free margin, which is the margin that you have to open up more positions. So if you are short on free margins, you'll not be able to open up position because your initial margin is not met. So the free margin is the amount available for you to open up new positions, and without that you will not be able to open new position until you close your existing positions. Now, your used margin is actually the amount that is being locked up on open trade, which is actually your maintenance margin. If you have a couple of trades running in the foreign exchange market, this will always keep aside a maintenance margin. Now, the sum of all this maintenance margin is actually your used margins. All right, so if you do not have enough free margin, or you have more used margin than your free margin, then you might likely not be able to open up more position until you close out existing positions. Now that we have seen the types of margins we have, let us see what a margin call is. Now, a margin call happens when your account equity falls below a certain percentage of your use margin, which is usually 100%, or sometimes it goes lower than 100%. All right, so your broker is actually going to ask you to deposit more money or close your trades automatically. So this margin call is typically a call for you to add more equity into your account so that you'll be able to manage and maintain your existing positions. Now, once you have no free margin or you have used up 100% of all your margin, then you are going to have a margin call. And if you don't respond to this margin call in time, all your trades will be closed automatically for you. And the reason is that the brokers do this to protect themselves and also protect the trader. And the formula displaying below actually shows the formula for your margin level, and this will enable you know if you have enough margin to open up new positions or to just manage your existing positions or even close out your existing positions. So to actually identify your margin level, you can actually divide your equity by your use margin and multiply them by 100. But this is not necessary because your brokerage firm automatically does this for you, and so you are going to know your margin level automatically by just typically looking at your used margin and your available margin. This will tell you if you have enough margin to open up new positions or not. Now let us look at why leverage and margin matters as forex traders and in the foreign exchange market. Now practically, there are numerous reasons why leverage and margin are important to us as foreign exchange traders, but the most important reason is that it helps us with our risk management protocols, right? We all know that risk management is a very important aspect when it comes to foreign exchange markets and even trading in general, and enough emphasis should be laid upon risk management. And that is why as foreign exchange traders, we need to understand what leverage and margin is and how to use them appropriately. Now, if you're a beginner and you do not know how to choose your leverage, it is very important for you to watch our other videos on leverage and how to use leverage, because this will help you so that you can manage your account easily and do not end up blowing your account. Because despite the fact that leverage gives you the ability to multiply your potential profit, it also increases the risks because it also increases the potential for you to incur increased losses in the foreign exchange markets. And your knowledge about margin will help you understand why you can no longer open new positions when you're trying to open new positions, and when you need to manage your existing positions so that you can take more trades or reduce the risk on your existing equity. So guys, this brings me to the end of this video. If you are a first-time subscriber and you're just visiting our channel for the first time, you're very much welcome. Please do well to give us a thumbs up in this video and do well to like this video and follow us on our social media handles. But before I go, I would like to share with you about the rewards program at Learnity. Currently, we have a rewards program ongoing where you can gain so many amazing rewards like cashback bonuses, trading bonuses, trading vouchers, and so much more. All right, all you simply need to do is use the link in the description below. Head out to the Learnity's homepage. Make sure you have an account. If you do not have an account, make sure to sign up a new account. Make sure to log in and go to the reward section. Make sure you watch the educational videos and you'll be awarded Learnity tokens, which you can later redeem for Learnity badges, and then you get your amazing rewards. If you want to know more about the rewards program ongoing at Learnity, you can easily use the link below to learn more about the rewards program and start earning rewards with us in no time. And until I come your way again, remember to always trade well and trade safe.